One.
Well, sell the rip couldn't have worked better yesterday. Buying the dip is working so far today, but the question remains, will that continue? What will Pump and Powell say at 10:05? I'm sure we'll get some volatility off that. And you know how we talk about low bar, high bar for earnings? Well, Hibbett's bar was on the floor and it leaped over it. It's Friday. It's the end of a volatile week. It's pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. What a wild day yesterday, but the SPOOs are on the rebound, up 11.5 handles at 43.9750. The buck is relentless on this move higher, punching over 104. It's up 5 pennies at 103.97. The bonds, well, they had a little rally, fading again, down just 4 ticks at 119 and 23.30. Crude doesn't want to give up the $80 level, up $1.13 at 80.18. Gold flat at 1946.50. Silver up 7 cents, 24.30. And Bitcoin futures, they're up $150 at 26,255. Well, I have to say, Triple D and Mitch, when yesterday in my makeshift operation, I was really focusing on the content of the show. I mean, you guys are good, Triple D. Selling the rip. You were emphatic on that one, and I wish I could have seen the quotes off the open. What a fall from grace yesterday.
It was just a perfect setup yesterday. And that's why I was very
What do we say, right? What's the quote, Dennis? What's the famous quote? The market likes to hurt where it can hurt the most.
Yeah. Punish
this
the
is
maximum.
This is one of the number one quotes that I've learned from you, Dennis, that stays in my head. I honestly, I would say about 90% of the trading days.
Punish the maximum amount of participants. And it was set up so well to do that yesterday with Nvidia pop, and everybody's like, okay, Nvidia blew it away. It's up 40 points. Let's just buy stocks. You can't help it. They're just going higher. You have literally 12 analysts coming out, raising their price targets, all lemmings. And you could just see and you could just feel. And, even Kramer tweets out on Nvidia, game, set, match. And I was like, holy cow. The ducks are all in a row because all these people are going to be wrong. And they absolutely were yesterday. Everybody who was chasing that rally yesterday was severely punished. Deservingly so, because you could just feel, the technicals were set up. We talked about a 50% retracement of the recent sell-off on the Qs. We talked about, the Nvidia, like having no catalyst with Christian. Christian was excellent as well, with nothing to look forward to.
Reserved.
There's sometimes just really good setups. And that was just a really good setup to sell stocks or to short stocks. And if you were shorting yesterday at the open, you were paid immediately. There was almost no heat on the majority of these stocks. Most of them opened at the high tick. QQQ basically opened at the high tick. Microsoft basically opened at the high tick. AMD, which I still have a half size position, opened at the high tick. It was ugly across the board all day long. They never let off the selling, and now you have everyone caught. So you can look here and say, oh well, yeah, we're just going to buy the dip and we'll be back tomorrow. I don't think it's that easy. You have key reversals in everything. So you look at the S&P, key reversal. What's that mean? Opens higher than the high, closes down at the low. QQQ, key reversal. Even my AMD, I'll talk against my book. Key reversal in that. Just go across the board. Nvidia filled the earnings gap. The hero, comes down and actually almost goes red, which was nothing short of incredible. Incredible quarter. That response is the worst case scenario for the bulls. Yesterday was the worst case scenario for the bulls. and we fell over 90 points from that high. Now, a lot of damage was done yesterday. Is it over? Let's see what happens with Jackson Hole. I don't think it's over, though. I think if you get a pop and maybe it says something in relief, I think if you get a pop, I think you're selling stocks. So what I tweeted out yesterday after the close was the AI bubble officially burst yesterday. It burst. So is it going to come back? Yeah, I don't think this is the end of the AI story, but I think it is in the short term. So I think what you've got to look is, when you get these pops, you get some stocks popping up even on earnings, I think you got to be looking to raise cash because I think it could be a little troublesome period here. I don't think we're going back to the October lows, again, because the Fed has a lot of ammo in their chamber with all the, interest rate hikes that they've done. They can, simply start taking them back and, the market would rally off of that. But I do think that short term, we just got, to a situation where we were very overbought in July. We sold off pretty hard in the middle of August. And then we had 5 days of relief pop where we got almost half the losses back. That was an opportunity. So now I think we think about the August lows. So don't think about the October lows. Think about the August lows.
Oh, yeah. Oh, yeah. We're not too far.
50 points down. So, and I've been talking for a few minutes here. So we'll let
I
you
want
guys
to say a
give your
couple
thoughts
things.
as well.
First of all, just in reference to yesterday, now I know we have a lot of different people and traders in the chat, and maybe we don't have people that short. So when we talk about that, we don't want you to feel like, okay, you missed some great opportunity. We just want two things. One, if you have a long and you have a target and you have an exit on a big update like that, don't hesitate to take it, especially early in the price action. I wanted to mention that for sure. And then also, we got a question here from Eric Dennis about seasonality. I know you like to follow a lot of different things. He says the last 5 days of August are supposed to be bullish according to the seasonality calendar. So I want to know what you think about that. And I also want to warn people, because the last time we had this key reversal, it came back not 1 day, but 2 days. And it lulled everyone to sleep. So,
you could do that again.
Yeah,
and
I could do that
use
again.
that opportunity. Like if we get back up, let's say he says something dovish today. Let's just say hypothetically, not
which
saying
he's not.
Gonna,
right.
But he may say something that comes off dovish. We get back to 441, 442, like half of yesterday's losses back. I think you're not only selling stocks, I think you're shorting stocks into that. So I would be a seller and a short seller 30 to 40 handles above here. I mean, not even, I don't know if you're going to get that much though. Like I think maybe you got to look 440, 441. And if you're in stocks and you're caught in stocks and you're like throwing up, it means you got too many stocks, man. Just, it's the same thing. We've just got to it's about balance and it's about your environment. And people keep citing, you have these money managers, these idiot money managers that keep coming on CNBC and talk about cash is so high. This cash has to make its way back into the market. You people are idiots. This cash is not coming back into the markets when I get a 6% GIC. There's competition. Tina Trade is dead, money managers. Stop talking like that. The money doesn't have to come back into the stock market right now because bonds are a clear alternative and cash is a clear alternative. So what I was saying yesterday, it's the money that's been taking us is just rotating. It's the same amount of money. It's not new money coming in. I'm sitting with a lot of cash in my portfolio because I'm getting paid to sit with that cash. So I'm like, why take risk for a stock market that has a long-term performance of 7.5%? My bankers call me and offering me 6, risk-free. So that is the problem. The rates are the problem. And that's why Jackson Hole does matter. If he does anything dovish, we could rally off of that. But we've got to stop thinking that all this cash on the sidelines has to come back.
Immediately has to come back in.
It doesn't. It doesn't have. If it go back down to 1% interest rates, yeah, it has to make its way back into the market. It doesn't at 5 or 6%. That is just, blinders. Like the horse blinders are on those money managers that are saying that. If you follow somebody that's saying that, stop following them because they're stupid.
How do you really feel about it, Dennis?
It's what we do, man. We say that's why we're real here. We talk real on this show.
It's funny because you're like, before you were like, why should I do that when I'm getting 4.5 on my money? And then a couple of weeks later, you're like, why should I do that when I'm getting 5% on my money? And then now you're like, why should I do it when I get 5.5%? And now you're like 6. Do we go 6 bid?
6% on a 13-month GIC. That we haven't seen that in 20 years. That's competition for stocks, folks. That's competition for stocks. So you can go back and cite all you want and look at the technicals from 3 years ago. We haven't had a market environment where you get 6% risk-free in
Nah.
almost 20
20
years.
years. Yeah. Yeah. A very different environment. All right, Mitch, where you at here?
So pretty much you guys are telling me that there's nowhere to hide in this market.
Yeah, cash.
Yeah, cash. That's
Not in the
completely
market, at
wrong.
least, like
There
somewhere
are
else.
so many places to hide. And the capital markets, think about the capital markets as three major buckets. You know, you can go alternatives and stuff, but there's three major buckets. There's stocks, there's bonds, and there's cash. And that is all capital allocation. You know, go back to your CFA. Certain environments, you're like 60% stocks. If you're younger, they say 80% stocks. You know, maybe, 15, 60, 40 portfolio, 60%. But right now it's moving the other way because the yields are so strong, even on the bonds, that it's eating stock market's lunch. That's why the stock market that has continued to rally over the course of the last 6 months, could be overextended. And people say, well, it's got to keep going because there's so much cash on the sidelines. They're wrong. They're wrong until rates start going down. But if rates start going down, that's when you're going to start hearing me get bullish.
A whole different story.
So we're not buying the dip in Marvell Tech today. Let's go to the action. This is where it gets fun, right?
It depends on your allocation too, though, Mitch. I mean, money.
Exactly.
No, I had a huge key reversal. I'm not buying the dip to answer your question, and there's a huge gap to fill, which Joel's going to talk about too. So ducks are in a row not to buy that dip, but give us the Marvell.
Let's give the numbers here. Q2 EPS at 33 cents beats the 32-cent estimate. Sales of 1.34 billion beat the 1.33 billion estimate. They do see Q3 24 net revenues at 1.4 billion, plus or minus 5% to a 1.39 billion estimate.
Absolute no man's land here. The only thing I talked about was on the closing print with Josh is like you had an area of support that you absolutely had to get out of the way if it breached that level of support. Now that level of support is going to be resistance. I don't think we're going under $50 today. That would fill the gap. The after hours low is just under 54. Really no man's land here. Dennis, I know you've been active in this stock over the years, so I'll let you take it from here. But all I can tell you
I'd be a buyer in the mid-40s. I would buy Marvell in the mid-40s. So it's not going there today. It's not going there tomorrow. It's not going there next week. But if we go into a prolonged, it's on my shopping list. This is one I would have on my shopping list. I do believe that this stock is going to participate in AI too. Or obviously Nick Brown, who's works here with Benzinga here, and we have him doing the official count. They said AI 54 times on the call last night. The AI bubble has burst, but it will reinflate at some point in time. I think if you got Marvell down in the low to mid 40s, I think you're buying it. I don't know if you're going to get it there anytime soon, but it's on my shopping list. But it's a lot lower on my shopping list for this. A lot lower price.
How about that candle? Like right here, like that. I was going through the charts last night, and I saw that like Marvell, and then AMD. What an intimidating candle. Nvidia. Well, it's a little bit different because it was all time. The other thing, Nvidia. How about the nice round number of 500? Forget about the option guys who absolutely nailed it with the $50 straddle. Something like that. Never been to 500 before. I think we opened just above it and tanked. I mean, so many different stocks, but that same candle is just reverberating in just about every tech stock here. But no, Marvell, no man's land for me. Let's move on to our next earnings stock.
Let's go to JWN and Nordstrom here. Q2 EPS at 84 cents beats the 45-cent estimate. Sales at 3.77 billion beat the 3.65 billion estimate. They do see full year 23 adjusted EPS at $1.80 to $2.20 versus a $1.99 estimate, but not getting as much love as I thought they would get with that kind of report.
No love
yeah,
at all.
Zero love.
It got to pop off the first kind of mention, right? I have a pop to 830s, 1830s, but then it quickly
again
just got flushed.
Yeah, the dumb algos, the earnings algos, which I have no idea who runs these, but like I said, some of them run them very, very.
I mean, they saw that beat, right? 84 cents to 45 cents.
That's a big beat.
They take it. They're trading off the headline number, and that's a good opportunity and shows you how more sophisticated the human being is over these algos. So we know we're in this market environment where selling the RIP is working very well right now. We know we're in this market environment where earnings, matter, but the guidance matters a hell of a lot more. So when they're buying it without even seeing the guidance, it's insane. And you know what? That algo is severely punished for that. So, up there at 18 buying, and then there's no bidders. And then the flush, and it flushed all the way down to 14 or 15 bucks. Now it's settled in. I mean, the
Oh, it
quarter
did
was
get
decent. The guidance wasn't that bad, but is this really where you want to have your money in Nordstrom? And then I watched these videos of that California Nordstrom store getting robbed. I mean, that is disgusting. I cannot believe this is happening in North America. I cannot believe this is happening in the USA. They have to stop this. We can't have, 30 to 50 thieves coming in and just robbing stores of $100,000 worth of merchandise. I mean, they've got to put these thieves in jail. I know it's like, some people, are robbing because of necessity, but we can talk about all the, the other stuff. But I mean, bottom line here is this is organized crime. This has got to be stopped.
Wow.
If they can get, any imagery of any of these people, they need to go to jail for a very long time.
They just don't care, Dennis. They
do care. They're going to figure it out, but they can't have it as a misdemeanor. I just, for fun, I looked in Canada what the crime is for, theft. Any theft under $5,000 is a felony, carries a maximum of 2 years in prison. So, I mean, there you go, 2 years in jail. So, I mean, you got to have that. We're not seeing this happen in Canada because, and maybe it's going to start, so I shouldn't say it. Maybe we're seeing it in little pockets, but not to this extreme. But, we still have, theft under $1,000 a felony. It's got to be a felony. You've got to go to jail for stealing like this. I'm sorry, for the people who are stealing out of necessity, but everyone else is taking advantage of this, because if they're getting a misdemeanor or they're getting a slap on the wrist for stealing like this, it's just going to cause more of it. So you've got to go to jail when you steal. I'm sorry.
Why not just transition and buy now, pay later?
Or buy now, or steal now and pay never. That's what they're doing. Steal now, pay never.
Wow.
Take it to Affirm here. It was a good transition.
Joel, if you want, give us technicals on JW.
I didn't even see it. I didn't see it sneak down to 15. Wow.
Someone got a nice little move right down there.
We got a nice bounce. If I wouldn't have seen the 15 print, I would have said, wow, there's at least one low at 16. But since it's been traded that low, it's like an okay level. I'd see what happens at 16. But I think the more important, whether you're a short or long-term investor, you got to be looking at the lows from the last 3 sessions at 1680. That's your 4-star, 5-star resistance. There'll be absolutely no rallies in Nordstrom until we can get above that, close above it. I've seen it doing some wild thing on earnings days, but instead of trying to find support in this one, I like to identify the excellent resistance at 1685.
All right, let's move over to buy now, pay later. Let's go to Affirm, and it's getting some lift here on their report. Q4 GAAP EPS came in at a loss of 69 cents, beating the loss of 85-cent estimate. Sales of 445.82 million beat the 406.26 million estimate, and Affirm sees Q1 revenues at 430 million on a high end of 455 million versus a 429.86 million estimate. Affirm getting a little bit of a lift here today, but I don't like any of these stocks right now, especially these growth names.
Either. Yeah, I think it's another opportunity to sell the RIP. So sorry, I'd like to get on the bandwagon here. And it was a fun story back in 2020, but this business model is just not working. It's apparent by the stock price. $390 to $14. No, thank you. Move on.
Need to hear pair of highs at 1458. You're now above it. Must hold that area. If you don't, I think you'll sink into yesterday's range. I think the other one, I'll make this chart just a little bit bigger here. Big rally near 20. You failed. You came back down, rallied back to that area. You failed, and now you're coming back up. So people got smoked twice buying this thing over 18, 19 bucks. I think you got some overhead supply in Affirm. AFRN trading up $1 though so far.
All right, let's go ahead. Let's keep moving here. Let's go to Workday. Workday is one that that's one that I actually think that, I try to think about AI overall, and I'm always thinking about it as what actual revenue can come out of it. When I think about software companies and things like that, that's where I think that definitely in the long run, you're going to see more and more products come out. Like I mentioned in the chat, I don't think AI is completely done. The hype might be, but now we go into more of a building phase where you're going to see a lot of people building products out of the AI that's available. Let's go to Workday here. Q2 EPS at $1.43 beats the $1.26 estimate. Sales of $1.79 billion beat the $1.77 billion estimate. They raised full year revenue outlooks to $6.57 billion and $6.59 billion versus a $7.21 billion estimate. So that's where definitely things don't look that good here for it to be getting this type of pop.
The stock has been an unbelievable performer here over the course of 2023. The stock is sitting near its 2023 high. That's impressive. Held up well. The problem is we're just not in this environment where I'm like chasing stocks, and I feel like you're chasing it a little bit here. 240 is major resistance. That's the high of the move. I think that's where you run the sellers. We've seen these stocks though before, when they're up and they've held up for this long on earnings, sometimes they continue to go higher. So I'd be hesitant to short the thing, but if I was long it, I'm probably ringing the register.
If I was long it, I'd be looking at yesterday's high at 35.69. You got a look at that in the after hours when it went to 35.70. So I look at the whole 235, 236 area. I mean, I look at that. I know you see the high of the move at 240, but for me, there's a major roadblock 235, 236. So if you can rally back to that, I look at that as major resistance. And then on days like this, I think a lot will be dependent on the market. I don't know if you're going to get a look at unchanged. But then again, did you think you're going to get a look at unchanged in Nvidia yesterday? I mean,
Unreal, man.
yeah, I mean, a little different situation. But Workday, great commercials.
What happens with Nvidia now? Just give us, because we went over and we talked overall market. We should talk the stock direct. So it gave back, fills the gap, gives it all back on a fantastic report. I'm telling you, the report couldn't have probably been better. What happens now? Joel, I'm throwing it to you.
What happens now? I'm just going to stick with this, the close from yesterday, because with all the zig and zagging that this thing's done, that all-time closing high from the 23rd was 471.16. The former all-time closing high was 470.77. So to me, I know it traded to 480, 490, up to 520. Those levels are irrelevant to me. If this stock is going to bounce and rebound, it's going to create a bid, 470, 471, create a base, and work its way back up. That's just what you ask for, one number all the time, Dennis. That's it, 471. Got to hold that level. Trading right at that level now, too, just to make it a little bit more difficult.
I think you caught everyone long in this, and I think the downturn continues. I think in the short term, it doesn't get washed out one day. I think every analyst is like feeling like, ooh, I don't like that. I raised my price target, 12 of them, and now all of a sudden they're all feeling the pinch. Anybody who chased it feels the pinch. You have everybody caught on this. You have everyone caught now. Everybody caught on this. And you know what? It was like even the people who were short, you caught them too, because you gapped it up and you held the whole thing just to shake them out too. Punish the maximum amount of participants. It was perfectly done by the market. Bravo, market. Caught all these longs here now too. I think Nvidia has a date with 450, and I think that date is soon.
Dun, dun, dun. We'll have to keep an eye on that.
Mitch, you might as well weigh in here on this one. I mean, you've been looking for the AI bubble to burst for a while. So can you give us one number two that you're focusing on?
Yeah, for Nvidia, I think at this point, you've had your quite a couple of runs, and one thing that I was pointing to, and let me see, I think I can just share my charts.
Sure, go ahead.
On that aspect of it, and
Sure.
Nvidia has had a couple of like kind of blow off tops. I kind of drew them with rectangles there, and a lot of times we get about like 4 attempts to break this kind of range, right? We've gotten that 4 attempt. Now I'm just looking for that gap fill. We were looking for these gap fills before, and they're right here. And so we're going to start looking for those gaps to fill. The first one's the 400. There's a little gap right there. And then we'll see if it leaks down into this bigger gap. If it gets into this bigger gap, this is where I think you'll start finding some buyers, because the 200 will slowly leak its way up here, closer towards that 300. And so somewhere in that bigger gap, yeah, I'll be a buyer. I don't think that AI is completely turning around. And if there's any company that did show us that they are able to make some type of revenue, it's Nvidia, right? The other companies weren't really showing us the money. They're able to make it. Why? Because they have the platform where everybody's going to build on. This is why I'm talking about that we're going into this building phase. And you got to look at the things behind the things to build AI. That's Nvidia here. All right, let's keep moving. Let's get out of this conversation. Let's go into an interesting area, which has been the retail disaster, right? We've had a lot of retail disaster lately. We've had like DKS. We've had Foot Locker that got completely destroyed. They started bouncing back yesterday. Let's take a look at one that got a nice little push up here, which is Hibbett. So I'm going to go to Hibbett here, Hibbett Sports. Q2 EPS at 85 cents beats the 73-cent estimate. Sales of 374.9 million, missed the 376.11 million estimate. They do see full year 24 sales to be flat up to 2%, and sees full year EPS of $7 to $7.75 versus a $7.18 estimate.
Oh man. This is all about the bar. This trade is all about the bar. It's Dick's was a disaster. They punished the stock probably more severely than it even needed to be punished. So that lowers the bar. Then you have Foot Locker lowering the bar because it got severely punished, deservingly so. So the bar was literally sitting on the ground for Hibbett, HIBB, bar on the ground. They simply walked over it. The quarter was okay. It wasn't blowing it away by any means, but they simply walked over the bar. And that's why it's up 11%. You made a good point. You were saying this is like the discount version of these. Like, I've never been in a Hibbett here, Mitch. So, just make that point here because I've never been in there, but you're saying this is kind of like the TJX of
I'll show you guys
goods.
the website, right? That's the easiest way to look at it, right? And you guys can see here, you'll see that they have
Discounts.
a lot of discounts, and I think that this is where they do well on. And so if you're looking for discounts for especially like shoes, this is where I go a lot of the times because they're just cheaper. They're going to be on discounts. Like, let's just say for me, I was looking at like baseball cleats, right? Most of these shoes would be at like $90. When you start seeing them here, you'll find them in sales at like $50, $70, right? Most of these cleats are like $90 to $100, right? And so that's what I think this does really well. Like, I know that some of these are like $90 right here. This Hirachi is $90 and they're selling it at $40. So it's kind of like an oversupplier here that gets access to these after they've been stuck in like, probably the Dick's warehouse for, 6 months. They send them over to Hibbett and then they sell them at a cheaper cost.
And that's good to know. I mean, the discount retailers are doing very well. TJX is sitting up here, and obviously yesterday had a key reversal, so I wouldn't be going buying that stock now. But I mean, you can't argue the thing was at an all-time high yesterday. So there's not a lot of stocks sitting up at all-time high. So the discount retailers have been outperforming. If this is a discount retailer, and I know nothing about Hibbett, so I'm just trusting what Money Mitch is saying. If this is a discount, that's the kind of stocks that you kind of want to be in. But with that being said, the bar was just very low. I don't think this is a blowaway quarter. It's like, whoa, they killed it. And the media will say, oh, they killed it, because they got to find something fundamental to talk about. Bottom line was, bar was on the ground. They walked over it. And, it's all about the bar.
Oh man, you got a spike near your 3-day high, and it was just very brief. So if I was long this stock, I'd be saying, man, can you get back to 41.75, 41.80, and clear that? If not, you got people stuck over 45 here. Pretty much been downtrend the entire month. So keep an eye. Let's see if you could get up and take out that pre-market high. If not, I expect a little bit of a fade. I don't know if unless the market completely craps out, I don't see getting to the top of yesterday's range at 38.14, up on 15,000 shares. Dennis, this doesn't trade a whole lot of volume, so that's significant volume. But keep an eye on that pre-market high, coincides with your 3-day high. S&P's back over 4,400, just climbing the wall of worry here.
Yeah, we like that. Keep climbing because I'm going to short stocks. I hope it pops.
One stock that we were talking about recently that I was wondering would get the drop. I was thinking Lulu. Lulu was one that's been on my mention on live trading 2 days in a row now. And yesterday they just flushed it. Look at that flush down. And then I've been seeing a lot of these kind of retailers that I think would hold on, but looking really weak. Look at Best Buy's action as of late. That's not looking good. Retail, man, they're coming for it. Is the consumer slowing down here, guys?
Yeah, they are, and the consumer is slowing down. And again, are we going into a full recession? I don't know, but I think they're starting to feel the pinch a bit. You can have rates, up and elevated, and people will find money in the short term, or the longer term, the higher rates still hit home. And especially in other countries where we don't have 30-year mortgages going on, it's going to hit home. And when you got 5-year mortgages in Canada, it's going to hit home sooner than the U.S. But I think there's people just feeling the pinch a little bit here. So I do think retail is the first thing. Well, you know what? I'm kind of not struggling a little bit here. Not going to buy some yoga pants here. So I think there's a play here with Lululemon, all that consolidation. I think that was a key. That was a huge reversal for it yesterday. I'm not sure it was a key because it might have matched the high, but it's close.
Yeah.
I think if this thing gets a pop back, I think you're selling it.
Man, there it is. Here's that candle again, and now it's Lululemon, and that's not a tech stock. I mean, that was a big, big decline. 360. I got nothing there for you. I'd say just stay green on this one for Lululemon. But man, wow, what a beatdown yesterday. Opening up. That's another thing too that and I think I mentioned this yesterday. When you have these big up opens like in a stock. I mean, that hardly was participating. I know it's not a huge component of the S&P, but if you look at it at a percentage basis, I mean, there was, not even over the previous day's high, and then boom, you see what happened when the market turned.
Let's go to one more news here, and we're going to go to the electric utility company. We've been talking about it. The Hawaiian Electric company continues to plummet here in pre-market trading after being hit by lawsuits and suspending its dividend. Maui County has filed a lawsuit against the company alleging negligence on the part of Hawaiian Electric for failing to adequately maintain their power infrastructure during a windstorm that led to multiple fires on August 8th.
You can't touch this stuff.
You can't.
It's just too much risk. I mean, people were buying at 20. It's like, well, this is overdone and cut in half. Now they're cut in half again. I mean, 5, it could be bankrupt. Maybe it pulls a PCG and there is some residual value. Maybe it turns it around. Maybe it doesn't go bankrupt. There's just too many unknowns here for me to put my hard working capital in the stock.
It's also hard to even play to the short side, right? Like, I just want to mention that too.
Hard both sides, Mitch, because now you've come down so far. And all it takes is, a headline here where there's something, okay, well, yeah, we think, there's a potential where maybe it wasn't caused by them, or maybe it was, maybe there's a way out of it, or maybe it's insurance, or maybe there's something. There's all kinds of different headlines that are going to be coming here. I just think it's a no touch for me.
I thought that I saw that that they didn't cut the power off soon enough. I thought that was like the premise of the lawsuit. I may be incorrect. There's only one level to give you. We're trading below that. 10.05 was the low of the move. Now you're trading under $10. You're trading at 9.70. So I don't want to say that's resistance because it could really blow through there, but traded down to 9.02. So it is 70 cents off its pre-market low.
All right, we'll see what happens there in Hawaiian. To state what you stated there, Joel, is correct. That it was a part of the lawsuits that are going. This specific lawsuit was just put out yesterday, but you are stating some truth facts there about potentially not shutting down the power early enough. Okay, let's get to. Yeah, it's time to get to our guest. I'm going to bring down my screen here. Let's go to our guest today. You guys smash the like.
Hi, Tracey. How you doing? Tracey Ryniec from Zacks.com. Gonna knock some sense into us today.
Please.
I'm good. It's good to be here on a Friday morning.
All right, just real quick. No one else cares except you and me, but I now have a nephew that is a freshman at Michigan and a nephew that's a sophomore at Michigan.
Wow.
So right
Congrats.
back in it. And we won't talk sports, but we are going to talk about the consumer.
Yeah.
The consumer. Are they weak? Are they strong? Toll Brothers, great earnings, other retail stocks getting killed. Is the consumer tapped out yet?
I don't think so, but it does depend on which consumer you're talking about, right? So Toll Brothers, the home builder, they're luxury. They average over $1 million for their average sales price, and 25% in the last quarter bought with all cash. So that's some pretty good firepower right there. And we've seen on the luxury retailers, pretty good numbers. They're still spending, but in the middle of the road retailer or even on the lower end, we're starting to see some of the pressure. We had Gap yesterday say that they're starting to see people pull back, and it does depend on what area too. So I can pull back on clothes. I could maybe pull back on shoes. So far, nobody's really pulling back that much on beauty. That side is staying strong. So they are making choices now. They don't have endless money. So they're deciding on certain things. They're even deciding on the streaming services now. Oh, I'm going to cancel that. They raised it to $20. I don't want to deal with that right now because my favorite show is not even on right now. So they're canceling out of that.
What's your favorite show?
Well, I like some of the, I actually like some of the Disney Plus shows, and that new Star Wars show is starting. I'm on there because it's starting this week, but you might not be, depending on which service you're on. Maybe you're a fan of The Bear on Hulu, but that's done now, so you cancel it. I don't know, but that's how the consumer is thinking. And yes, $20 a month, they are feeling the pressure, inflationary pressure. So they are looking even for these small amounts to have some relief from paying those, at least for a little while. So yeah, we are seeing them pull back, but this is what the Fed wanted. They wanted the slowdown, and now we are getting it. We're just not in a recession.
How about these uneven earnings reports among the retailers? I mean, not everyone could shop at Walmart here, but that had a good report. That's just holding up near its all-time high. It looks like no one's going to Macy's. So not only is the consumer cutting back on certain things, but they're going to certain places and they're not going to certain places. So talk about the disparity in the retail earnings.
Well, again, they're making certain determinations, and Walmart is on the lower end, so they're holding up fairly well. You are going there for, food items, but like you are at Target, but Target, they're starting to blame a few other things that always makes me a little suspect. So in prior earnings reports, a lot of times the retailers pre-pandemic would blame weather. Oh, we had that hurricane, which is a legit thing, or we had a blizzard, but it lasted a week, but it hit us. Sometimes they just blame it all together. Oh, the weather. And that's always kind of like a excuse, that you have to kind of take with a grain of salt. But this time, someone like Target, a lot of them are blaming the theft. The theft is hitting them, but it is. And a lot of them are also now starting to say things like Target did about, student loans are starting up again, but that's not until October. So they're anticipating evidently that they believe that that's going to hit even more of the discretionary spending, because suddenly you're going to start up with, a couple $100s a month again. And rightly so, but we don't know yet. So yeah, it's all hit or miss, as you just mentioned. The department stores were struggling mostly before the pandemic, and now it's kind of returned to that. So that's not a surprise. Beauty, again, is still on the strong side. Luxury, certain niche retailers are on brand better than others. So like an Abercrombie and Finch, maybe on brand a little bit more than the Gap is. So the Gap is saying, oh, no one's spending, but they are seeing the spending at Abercrombie.
Why is that? Like, why is Urban, Tracy, and Abercrombie and Fitch? Why the separation here? Like, I'm old, me and Joel are older. I just see, the Gap, Abercrombie, and Fitch. I kind of see it as all the same stuff, but it's not. I mean,
No.
there are certain brands. Is that just because they've revived the brand, like Abercrombie and Fitch, and it's just like the new thing? Like, why is Urban and Abercrombie and Fitch so much better than the Gap?
Basically just the different brands. So Urban itself, Urban Outfitters, wasn't all that great this quarter, but its two other brands were much more outstanding, the Anthropologie and the Free People. But Free People, again, is on the upscale. It's more luxury. So that side is still holding up, and that brand has always been pretty strong. But if you notice in the report, even at the wholesale, they do Free People at the wholesale level, like in Macy's and Nordstrom's and whatnot. And that did not perform as well as what their stores did. So you can still see the effect of the department stores not doing all that great, but that brand unto itself is still holding up. But that's on the more, that's definitely more on the luxury side. And it's a little bit different quality as well. So people maybe are paying up for, the better quality, the better, 100% cotton instead of polyester and acrylic mixed in there, that kind of thing. So, yeah. And those retailers haven't had to do as much discounting. The promotions weren't as bad. They did get rid of most of their inventory that they had excess orders to from last year. So now that's done. The ships have arrived. They've gotten rid of a lot of that. And so they've righted the inventory. And some of them should be fairly well positioned for the holiday.
Tracy, we talk about valuations, and it's hard because once momentum gets going to one side, valuations don't matter until they matter. But you're identifying some pockets of strength here in the market, also based on valuations. So what's catching your eye? Like something that's lower valued, like when the market's getting killed? There seems like these sneaky buyers in there, kind of like Mr. Buffett.
Yeah, I still like energy. I've talked about it many times when I've been on here, and it's had a rough 2023, at least to start. But over the last, say, 2 months or so, we've seen it turn around, mainly because WTI finally, retook 80 and is kind of hanging out around the 80 mark for now. And some, including Pioneer Natural Resources CEO, thinks it'll get closer to 100 by the end of the year. So that just goes right to the bottom line. The earnings have been crushed down on the oil producers all year because they had the Ukraine spike. They were selling their crude for well over $100 for about half the year last year. That's come way down. So their earnings are way down. But now is when, we're starting to see it cycle back. It does have these kind of swings. And this is when they're cheap and nobody's really paying attention. Some of these stocks on the producers themselves, not even big oil, but on, say, like a Matador, they are down, or they are actually up this month, up about 6 or 7%, I think, for Matador. And you can see that in a lot of the producers. Some of the service side, which had been hot, pulling back a little bit this month, but not anywhere near what a lot of the tech stocks have been doing. So I took a look at like Coinbase the other day. It's down 27% over the last month. None of the energies, even on the services side, it's anywhere even close to that. If they're down, it's down like 3% or something in the last month. So yeah, Warren Buffett is kind of hanging in there and keeps adding to his Occidental position. I know a lot of people are like, but Tracy, he sold some Chevron last quarter, but I'm not sure that was him because at least one of the lieutenants was in Chevron very early in 2020. Ooh. And we had a small sale in Chevron, and then we had the buys in the home builders last quarter, which is probably not Buffett as well. So I feel like that was not Buffett making that little trade there, because why would you at this point? So he still has this huge position in Chevron as well. And he's been in this trade before. He was in this trade in the 2000s, the last time we had the energy bull. He bought PetroChina in 2002, I think, or he was adding to his position then for about 400 million. He bought PetroChina for, and then he ended up selling it in 2007, 2008 for about 4 billion. So he knows this kind of energy trade when we go into an energy cycle that's bullish, which is where we are.
Okay, so Warren going out, as you said, in a blaze of glory here.
Yeah.
So now I'm going to mention two dogs here that like no one, like everyone is like, mention these stocks and they plug their nose.
Yeah.
First, let's start with the House of Mouse. You mentioned that you were Disney Plus, long-term support, $85. Took that out with a vengeance yesterday. Talk to us about the valuation, what you're looking at in Disney.
Well, it's still struggling. I don't like any of the companies that are the streaming services. So that's part of its problem, right? They have huge expenses. If you're making the Mandalorian series, that's not cheap. You got to spend to make all these like sci-fi series. You got to get the stars in there. It's billions of dollars. Netflix made it look easy and made it look like, oh, we can just keep all of our subscribers. It's no problem. But it's not. It's a lot. And then we had the pandemic. All of their parks and hotels and whatnot have struggled during that period. Obviously, we've reopened, so that's helping them. But even still on travel, consumers are making different choices now too. They don't have to stay in the United States. They don't have to just go to that park anymore. They can, everything's open. They can go a lot of other places. So Disney, this is one I watch pretty closely because so many people I know, and maybe you know, own it because they own it, say, in their kids' college fund. A lot of Gen Xers own it for their kids because they bought it like 10 or 15 years ago thinking, I'll put this in. I can teach my kid how to invest because they know Disney and they'll be interested in like what I'm doing. And I've talked with some of these people in just the last couple of weeks. I'm like, what are you doing with it? It doesn't pay the dividend anymore. And at least that was something before. But I took a look at the 20-year chart because I know someone who's in it for 20 years. And it's fallen all the way back where it's basically breaking even right now with the S&P 500. So that's not terrible, but you were expecting to beat the S&P 500 and you're not. And anyone who bought it, obviously it's at 9-year lows. Anyone who bought it in the last 10 years, it's been terrible, but they have bought it for their kids' college and they're not getting the dividends. So it's a tough one. I am glad they brought back Iger. I do think if anyone can turn it around, it's going to be him. And, the brand is still the brand. It's still Mickey Mouse. We all still love all the brands. They've got the Star Wars, but it's not that cheap here with what is going on with earnings. So as a value investor, I'm still staying on the sidelines with that one.
What do they need to do to turn it around? Like I was in Disney for a long time too. And the reason I've sold it is just the fact that it seems like the parks were firing on all cylinders, but everything else was not. And everything else. And I said, if they lost the parks, if they start to see a decline, a slowdown in the parks, the stock is in trouble. I think that is what is happening now, is that we're starting to see a slight slowdown in the parks, and none of their other businesses are doing well at all. Like obviously ESPN's been a disaster. The Fox acquisition was an absolute disaster, and it's probably what is weighing on the stock the most. And Disney Plus, they can't seem to figure it out here either. What turns this story around?
I don't know. I'm not sure.
That's why you're on the sidelines.
I don't own it. Yeah, because it does have all these components now. And, Iger's going to sell off some things, like he wants to maybe sell ABC and get rid of that. But maybe just to return to their usual focus without all these distractions, but I'm not sure. So that is why it's a little bit riskier here, because you don't know where earnings are going to be going over the next several years.
All right, so we got to talk about one more stock, one more dog of dogs here. And, we talk about, why should you invest in a stock that has a high dividend when you could invest in, T-bills or CDs or something that's safe here. But you got a stock that's just been in a prolonged downtrend here, has good cash flow. Talk to us about Walgreens Boots Alliance. They should have never gotten rid of WAG, but anyways, talk
Right.
to us about the yield in WBA.
Well, it's over 7% here, well over, and they are still paying it. They're a dividend aristocrat. I don't foresee them getting rid of that, but you never know what companies are going to do. Did I foresee Disney getting rid of its dividend in a pandemic kind of situation? No. So many people are in it just for the income, but as you just mentioned, I could also be in a money market account getting 4.5% or 5% right now. It's lower than the 7.5%, but my principal is still sitting there, safely instead of on the decline. Now, I looked at the 20-year chart on Walgreens and it's down 22%, I think, over that 20-year time period. And that is just, wealth destruction, basically. But this is another business that's struggling in the changes that are going on out in its marketplace here. Even on the pharmacy side, we're starting to see changes with, California getting rid of CVS. So this is very challenging for them as well. They do have the free cash flow to cover that dividend, but I know a lot of people who are in it just for that dividend, but it keeps hitting these new lows. And that's not what I want to be in as an investor. Even with that kind of yield, I'd rather take the no yield or super low yield Nvidia, obviously, over the endless decline of a Walgreens where you can't even see where that bottom might be. And that hit a new low yesterday as well.
Why is this not Rite Aid? Like, that's what I've argued on these stocks for a while, and I'll even throw it out there at CVS. How are they different? And maybe, CVS has got, I don't know, but I see what Rite Aid has done over the course of the last, and obviously went bankrupt and it comes back and it's down at $1 here again. I mean, it's just an epic disaster. I don't see Walgreens as much different than Rite Aid when I'm just looking at it. Maybe I've got blinders on and I'm not seeing, the other opportunities here. And then, take it to CVS as well, because this stock has not been a great performer here either. I do think it's best of breed, but this thing's straight down for a couple of years here now too. How are they not Rite Aid?
A lot of both CVS and Walgreens tried to make the big push into healthcare, actually having the clinics in the pharmacies. That they have done it. I mean, I go to get flu shots at the Walgreens now and stuff like that. But I think they expected to see a little bit bigger push into that, and that's not happening. And then the pharmacy side has always been their bread and butter, but there is a lot of competition in it, even online competition now. And so that's been hitting them. And then they've had, just the retail side, but that has been in the decline too, with the expansions of, smaller urban Targets. And even, Walmart is a competitor on the retail side. And then combine it with the pandemic and the theft increase that we've seen on the retail side, that's not helping them. So it's a lot that's going on there. And I'm not sure, remember CVS bought Aetna, so they have that combined now. And it's just whatever that big plan was, did have a speed bump during the pandemic, and they haven't really recovered from that. So it's just a change in the industry. And this happens a lot in various industries, and we're seeing it play out in the pharmacy stocks.
All right. So I did want to ask you, Tracey, about the banks here. What do you think about any regional banks?
I think those downgrades we recently got from S&P were, a little bit too late to the action. But that being said, analysts have been lowering all their earnings estimates again on some of the bigger regional banks. And so you're seeing it being hit in the earnings. Will it be overdone? Maybe, but a lot of them are looking for a little bit of a rebound into next year. Then once the Fed stabilizes, the net interest margin should stabilize. But we don't know when the Fed's going to stabilize, right? We all thought maybe one more and then they would be done. But is that true? I don't know. I'm starting to hear things out of Jackson Hole about like maybe next year we might raise too. So that is going to really be a factor with the banks going forward. There is one bank that I like a lot that's kind of done a victory lap during all of this. I own it in my own personal portfolio and in Zacks Value Investor, and it's Bank OZK. And ironically, that is a real estate bank. So a lot of people get freaked out about it. Like, it's in real estate. Why do I want to own that? But they have awesome management. It's one of the best management teams, I think, out there on the regional bank side. They actually have had deposit inflows, not outflows, from their depositors. But really, it's about real estate. So they loan out for new construction in like apartments, condo buildings. So again, a lot of people are like, I'm nervous. The rates are rising. That's not good. But they're very good at their underwriting. And if you go back and look and see what happened, even in the housing bust, they had very few properties that actually, had to go under. So I really like them here. And they have also sold off recently on just general regional bank worries. But they're very cheap here and they pay a nice dividend yield. And again, their management has been in there since the 70s. They remember what happened then. So they do have a lot of experience.
All right. Like always, you guys can learn all about this. Of course, if you haven't checked out Zacks, I'm going to throw up the link here so you guys can get your free trial. Even I have to check out Zacks every now and then. So definitely check it out, guys. You guys will enjoy it. It's always good to have you. Tracey Ryniec, it's always good. Take care. We'll have you back on.
Thanks. You too. Go Blue.
Go Blue. There you go, Joel. I knew that made Joel smile right there.
All right,
let's take a look. What are we seeing in the markets?
We're creeping. This is a creeper rally here. Sell the dip worked yesterday, or sell the rip, buy the dip. We're just getting into just a really limited area of resistance. So I don't know. I kind of like 44.17. I'd love to see us up at that area for a lower risk short or getting out of some longs. It's about 14 handles away. So we got any more issues to cover here? We're gonna take a stock or two from the chat.
We're gonna talk AMC. APE is officially gone, so it has now been converted into AMC. AMC, obviously, all the dilution from that. This is your disaster stock, not only of the day, of the week. Somebody was saying this is down 57% this week, which I feel, you feel for the retail investors who were in this for the movement, but you just got to understand, you were in it for the movement. That's fine, but don't be in it for the money, because the money was on the short side on this thing, and it was made. I don't even know if the short side was made. It was probably made just by the brokers, because the borrow was way too much to even make money on that side too. So basically, they found a way on AMC for everyone to lose,
except Adam Aaron.
Except Adam Aaron, exactly.
Yeah,
Adam Aaron.
If you guys don't want to say it, I'll say it. At the end of the day, he's been the destruction of AMC, I think, here. Not necessarily even share value. He destroyed it himself. And I think that where a lot of you guys are out there thinking that he's been the savior of AMC, no, I think he's the complete opposite. I would call him the omen of AMC, but that's just me.
I don't know if he destroyed it. I wouldn't take it that far, Mitch, but he definitely profited from it. What I'm going to say is, I'll just clarify it. He profited from all the apes. He's the one that rang the register and profited. I know there was some other people that made some money, but we know Adam Aaron was up there selling, a lot higher than this. And then he's coming out and he's blaming Benzinga, because we had one headline or something. He's just finding reasons to try to pass the blame somewhere else. When meanwhile, it's been massive dilution here. And AMC was maybe in trouble. So I wouldn't say it's Adam Aaron's fault the company's in trouble, but he definitely rang the register and made money.
Well, get your free popcorn, guys. Let's wrap up the market. How are you seeing the ES, Joel?
I'll be looking for follow through that pre-market high 43.06, really in a vacuum area. And then the fireworks starts at 10:05 with Jackson Hole. I mean, if you're good at playing that stuff, go right ahead. I think it's a key day for the market, because we had a key reversal a couple weeks ago. They threw a head fake at us for a couple days, and then you know what happened. So I'm just going to try and be patient here. I'm not going to, right now we're moving up. I'm not going to fight the uptrend, but if we get to some good levels, and then it's a whole different story. And that's up about another 14 handles. Someone asked about BETR. Oh boy, Better Home and I don't know what to say about.
I don't know what you're doing, bringing up a $1 stock here, Joel.
Either did I. I should have pulled it up first, Dennis. I didn't pull it up first. I'm sorry.
I have no idea what the
usually-
story is on this one. Obviously, the story's not very good. It was $23
$15
yesterday.
million.
It's a buck. Maybe this is what is
Holy
this?
moly. I don't know.
It's
guys.
I don't
$23
know.
yesterday. It's a buck today. Something's up. I don't know.
Look at
what's
the
up.
daily, man. That
I
stock
don't know.
just
I have
makes
no
me
idea.
laugh a little
I
bit.
don't know this
man.
story.
Yeah.
I don't.
Crap,
On that
man.
chart, I don't care to know the story.
All right, Tim, back on Monday. Tim Quast is going to be back with us on Monday. He's been a busy man, but we'll talk about that with him on Monday. Everyone, great week, fantastic week, fantastic price action, and that's it. S&P is showing some green on the screen from now, but that's the way it was yesterday, too.
All right, guys. See you guys on live trading. That's starting up in just a second.